Hey, Salvador Braven here. Welcome back to the Crowdfunding Diversify YouTube channel. On this channel, we talk about crowdfunding, and real estate crowdfunding is one of the niches that I love to cover. I've actually written the book, Real Estate Crowdfunding Explained, and it's grown so much since the early days. And today I wanted to do just a video contrasting, comparing some of the things between REITs and real estate crowdfunding. So if you're kind of confused between these two, I'm going to shed a little bit of light on that in today's video. I hope that you enjoyed. If it's your first time here, make sure you hit that subscribe button, but it's coming up right after this. Okay, so let's get down to the brass tacks of it, right? What's the difference between REITs and real estate crowdfunding? How are they similar? How are they different? Let's talk a little bit about this. So first of all, what the heck is a REIT? So you might already have a little bit of familiarity when it comes to REITs. I'm really trying to target this video to beginners out there in the audience. So I think the easiest way, honestly, to understand a REIT is the fact that it's kind of like an ETF. It's kind of like an index fund, where you have an index fund which maybe tracks a basket of stocks, right? Where you have an ETF which has a bunch of different types of companies, or maybe a particular type of sector or a certain type of asset class, right? It's kind of similar in that way, in that basically people didn't want to have to become property investors where they are also landlords, right? People are lazy. They didn't want to have to manage the properties. They didn't want to have to figure out the termites and all the water damage and have to fix things up, right? Have to lease them out and deal with the whole operations when it comes to management of property investing. So instead, rather than having to either do it themselves or having to find a partner in order to work with and put up a bunch of money, instead, this new thinking about which are REITs, right? So REITs could be a bunch of different asset classes. It could be, for example, you're investing in commercial property, it could be in residential property, it could be the fact that maybe that REIT is collateralized by debt in some way, and when those people are paying back their loan, you receive fixed income payments in that way, right? So it's kind of dividends, and there's also appreciation when it comes to REITs. So think of it almost as though you're investing in either a sector of real estate or a bunch of different real estate properties, and someone else is handling the entire management of that experience. So you're just kind of sitting back there as a passive investor, you're collecting dividends, you're also seeing appreciation, obviously, and when certain properties are sold, that's passed on to the investors. And there are all a bunch of regulations that I'm not even gonna get into in this video when it comes to the fact that they have to pay out a certain amount to those investors. Now, one of the big things about REITs is the fact that you can actually publicly trade these REITs. And this is very important when comparing it to real estate crowdfunding. So first of all, one of the hallmarks of REITs is that, number one, you can obviously publicly trade these on a publicly traded marketplace, right? So there's a high degree of liquidity. Now, is that true? Of course, there are also privately non-traded REITs, right? With different kind of types of REITs. I'm just kind of doing a broad overview here. I'd say one big thing when it comes to REITs is that there is liquidity, right? There's a lot more liquidity when it comes to REITs. Number two, when you're thinking about REITs, you're thinking again about a basket almost of different real estate properties, or a basket of debt, right? Or a basket of different types of asset classes when it comes to real estate, okay? And those, when it gets paid off, when rents come in, when debt is paid, whatever type of REIT that you're investing in, that is passed along to the actual individual. They're not dealing with any of the kind of management. So how does that compare to real estate crowdfunding? Well, there are two different models when it comes to real estate crowdfunding. One is more of a traditional real estate crowdfunding model. And I think that's honestly the biggest contrast between the two. So for traditional real estate crowdfunding model, it's kind of like you have a property, right? And when people are deciding to invest in that property, they're actually owning a small piece of that individual property. And the investors are picking out which properties, point and click, which properties they want to invest in, which is super compelling, which is super cool. So it's almost like you're crowdfunding, for example, like an office building, or you're crowdfunding a piece of residential real estate or commercial real estate or whatever it is, right? You could crowdfund a bunch of different property types. And that's what's so cool about crowdfunding. It's kind of the traditional, original vision of real estate crowdfunding and how it starts to become about, and what I wrote about, obviously, in my book, Real Estate Crowdfunding Explained. I also have a free course on real estate crowdfunding, which you can check out down below as a link in the description. So there's traditional real estate crowdfunding where you have one property, right? And people are deciding to become an investor in that actual deal. Then something kind of came about, which is kind of going back to the way that human beings are, right? Which is that we are kind of lazy. We're a little bit lazy, right? We don't want to have to figure out, okay, this property versus that property. We don't want to have to compare metrics. We don't want to have to dig into all the different spreadsheets and that kind of stuff, particularly if you have a 9-to-5 job and you're just kind of doing this for fun on the side, right? We're just kind of diversifying your portfolio when it comes to retirement. You're diversifying your broad general portfolio, and that way you just want some alternative asset classes in there, right? So they came up with a new thing, which is like an E-REIT. So this is kind of popularized more so initially by Fundrise, right? So Fundrise is E-REIT, where you basically have a bunch of different property types, maybe a different geographic area of a country, right? Of the country, like the Midwest, for example, or the eastern area of the United States. So you have different property types in those different areas, and you can be classified into different E-REITs, particularly when it first came with Fundrise. So after popularizing this idea, a bunch of other real estate crowdfunding platforms kind of hopped onto that idea, and now REITs, as they're called, privately non-traded REITs, are very common when it comes to real estate crowdfunding. So a lot of these companies were using Regulation A+ in order to actually do these raises initially, right? And able to raise upwards of 50 million at that point in time. So what they would do is they would offer this financial instrument to people online, where it's basically, hey, if you're interested, you can invest in this particular different types of properties which aren't available publicly, right? And we're going to use crowdfunding in order to raise money for this. And if you want to, you can participate in this deal. It's almost like you're getting a mini portfolio, and they're just going to handle everything when it comes to the management of that deal, or they have particular sponsors that are already doing that. So the biggest difference between this second model, when we talked about the first one, the traditional real estate crowdfunding model, the second one is that this is much more similar to a traditional style of REIT. The biggest difference is that typically these are non-traded REITs. They're not traded on a public marketplace in any kind of way. So unlike the other kind of REIT, which is much more liquid, these REITs tend to be not as liquid. So it tends to have a much longer investment horizon in that way, if that makes sense. The other big difference here is who it's open to, okay? So each platform is different, and some platforms are just open to non-accredited investors based on the regulations that they're using to raise money, right? And also they have the ability to do general solicitation, etc. Other types of REITs, other types of investments are not open to the public. And this would probably fall, in my opinion, more along the lines of the traditional crowdfunding model. So sometimes these deals are only open to accredited investors. They're not open to non-accredited investors. Now, I have a whole other video that I put out recently going through differences between accredited investors and non-accredited investors. So we're not going to cover that too much on today's video. But the one thing that you should take away is that, number one, typically when it comes to real estate crowdfunding, there's two models. Number two, when it comes to real estate crowdfunding, particularly these REITs are usually not publicly traded. They're non-traded or private REITs in that way. And number three, sometimes you can participate as a non-accredited investor. Other times you have to be an accredited investor when it comes to real estate crowdfunding.
Attention, new and seasoned real estate investors. There's a new way to build wealth in commercial real estate that everyone's talking about. There's no annoying property management or even tedious location selection. Let me introduce you to the top real estate investing platform on the market today, CrowdStreet. CrowdStreet has offerings for you with unparalleled institutional type commercial real estate. Now you can be in control of your elite real estate portfolio. Tap the link in the description to learn more, or check them out at crowdstreet.com.
So I would say that, from more of the industry perspective, one of the biggest differences I also see would just be the regulation and the compliance around these two different styles of financial instruments. That's really one of the biggest differences. Are these, registered when it comes to the SEC? Also understanding the different disclosure requirements, etc., that go into these different types of raises. That's one thing that goes beyond the scope of this video, but something that you should be looking into a tiny bit if you're interested in investing when it comes to real estate crowdfunding, or in general when it comes to REITs, etc. And just understanding a little bit of that does kind of help, in my opinion, understanding where your money is going. And also, if you're an investor, things when it comes to that, so that you can be aware of that as an alternative asset class. So like I said, I think it's great to have a diversified portfolio. And I think that really just makes the most sense for most people out there. And as a way to just shield against risk, and also depending on your age and depending on what your goals are, you can obviously adjust that as you go. So hopefully you found this video to be helpful when it comes to real estate crowdfunding, when it comes to also raising money, when it comes to understanding where your investments are going, and how this is different from other styles of investments when it comes to REITs, etc., and different financial products. One of the things that I would say is that if you're interested in learning more about this, you're interested in learning more about real estate crowdfunding, go and check out my book down below. Go and check out my free course. And also check out the sponsor of today's video as well. I have a lot of great resources out there on this channel. So if you enjoy my style of teaching, if you like the way I try to break it down in a no-nonsense fashion, trying to stay away from a lot of the fancy financial vocabulary, and things that just kind of go a little bit glaze over, right, when people are listening to that, give me a thumbs up. Let me know you enjoyed this video. Come subscribe for more content like this, and I will see you next time.